Okay, so I'm telling you, streaming. Yep. Alrighty then. Welcome everyone to the Pro Trade Room Plus, durable goods, Canada retail sales. My name is Lee Goldstein, Trading Director for 10-Minute Trades. Please remember, all the trades we discuss are for educational purposes. I'm not a financial advisor, so trade carefully. It's possible to lose money trading futures. Okay, let me just put the news up. So I wish that we had the absolute most fantastic. Now, hang on, because I see that my webcam is all screwed up. It's these new monitors with the resolution. Let me fix this recording. Hang on one sec. This should solve the problem, I believe. Give me a second, sorry. Okay, that should do it, I hope. Okay, everyone, welcome. Let me just wait for the internet. Traders of the internet. Okay, welcome everyone. Core Durable Goods. My name is Lee Goldstein, Trading Director. So let's get started. It's afternoon in Kenya. That's pretty funny, Roz, that your day is over pretty much. So look, I've been doing a lot of testing on durable goods. I've got a trap trade that we've tested. It's not that great. And let's look at the DMM, because the DMM, it does give you some hints as to what we're faced with. Let me just get the news set up also. So I'm just, I'm a gigantic baseball fan. I mean, especially now, the Phillies are just unbelievable this year. It's like a magical team. But everybody gives the manager a pass. He blew the season last year by using the same relief pitcher 2 days in a row. When the guy was shot in September, everyone knew it. It wasn't even negotiable. And he put him in 2 games in a row to blow 2 games, blew the whole season. And I would have fired the manager, and I just can't stand it. I can't stand watching him manage pitchers. It just drives me insane. But the pitcher that he used, they traded, and he's doing terrible on the team they traded him to. Of course he's doing terrible, because his career, I don't ever want someone's career to be over. But his career, he's older. Relief pitchers, they just don't last that long, and he's not having a good season now. The Philly manager should have been fired when he used him 2 days in a row and blew the whole season. The whole season in 2 days with one bad decision. It was egregious, and it was grounds for firing. Now, I'm pretty crazy, but that's the way it is. So durable goods. Let's look at the DMM. I don't know what got me started on that. And I was reading a news story about the relief pitcher. He's pitching for Baltimore now, and I'm not going to say his name. I'm not out to pick on him specifically, Craig Kimball. But let's look at durable goods. So last month, as a breakout, durable goods. Now, you have to look at the DMM very carefully. And I do want to say hello to people that are watching us on YouTube, thank you for coming. April was a stop on durable goods. It was a little bit of a whipsaw. I mean, it was just a complete whipsaw. And then in March, it was a decent little winner. February, a decent little winner. And then durable goods disappears because it trades with GDP, it trades with Thursday jobless claims. Durable goods is another one of those reports like, jobless claims. It sometimes trades by itself and sometimes it doesn't. All right. Now, it's one of those that when it trades by itself, it's not bad. Because if you look at the DMM, and we've got to go back a year to get 4 winning trades, but it's actually 4 out of 7. There's one missing month here that was missed. I do believe that, yes, July durable goods was also a winner. Oh my dog, the dogs that I'm watching, they must have an upset stomach. I think someone just died in our office. Oh my God. I may have to do this outside. If we look at July, at least according to my notes, let's see what happened in July. I'm showing that durable goods was the trade of the week. Shoots down, first target, shoots down, second target, bingo. It was a nice trade. And then we were looking at Canada. And what was it on Canada? Retail sales or GDP? I'm not sure. It was back in CPI, back in July. The point is, add a winner in July to the DMM here, and you have 5 out of 7 durable goods that have been winners. So, look, I don't think it's the greatest report, but it's a 10 stop. For me, I'll probably give it a shot. I'll give it a shot. I'll trade it because its behavior when it trades by itself is pretty good. Pretty good. So, going to give it a shot. Now, so what could you do to reduce risk? It doesn't move enough, I don't think. Well, look, we've got 19 ticks, 26 ticks, 44 ticks on the winners. And that July one was probably in the middle of those, probably just as good, probably in the 30-ish. I suppose if you want to reduce risk, that you're just not a lover, you're not fanatically motivated to trade this report, you could trade it with one contract. So how would you do that? How would you take the DMM and convert it to a one contract trade? So here's how I would do it. And there are tools in the software that help us do it. So load up the strategy like we always do. It's a breakout. We're going to trigger at 8:29.59 on this report. But instead of doing 2 contracts, I'm going to trade. Now it's a bracket of 8. I'm actually putting on a 6 to see what the market will test the brackets. We'll see what the market's like. Let's see if the charts will, if the market can deal with a smaller bracket. Normally, I don't change the bracket. Smaller, normally. But anyway, so because it's not a big mover, and we got 19 ticks. All right, so I'm going to just test the brackets at 6. I may wind up going back to 8. I'll decide in a minute. How do you reduce risk? Instead of doing 2 contracts, we would do 1. my profit target, I'm going to make 15 ticks. Now, 15 ticks is pretty reasonable, a pretty reasonable sized target. It's not being greedy on this report at all. The stop is 10, and I would use the feature if the market moves 10 ticks in my favor or 12 ticks in my favor, move the stop to break even plus 8. So if it has a mediocre move and it doesn't hit the target, and then it changes direction, but it goes 10 ticks, let's say 10 ticks, move my stop to break even plus 7. And then as it's reversing, it should get you out of the trade with a small profit. That's how you could try to reduce your risk with one contract. If everything goes to form and it just bursts to a 20-tick move like it's done on half of these, probably 3 out of 5 of these, because I think July went at least 20 ticks. Then you're going to hit that first target. And, you have a decent little trade with a small risk. Now, I think that's the way I'm going to trade it. Let's do what the software technique allows us to do. So 829.59. Let's see if our brackets are safe. Now, this is a good generic template. So I would call it 830 one contract, because it could be easily manipulated for a different trade. So what we want to do is look at the bracket width with 0 as the time. What's the market look like in terms of the volatility at the moment? Now, I did forget to label. It's so important to label the trade. GC breakout. Because notice now I know, because we're going to put on another strategy because we have Canada retail and we want to see if Canada retail moves at all. Canada retail, there's no DMM. It used to be a tradable event. It has not been a tradable event in a very long time. Now it looks like at the moment, don't forget the gold market opens at 820. Right now, our bracket seems pretty good. The market's not that busy. It's not that volatile. Looks like we can get away with, ooh, look at that. And then the market does that. I'm just debating. I think no matter what, we should, if there's a 10 or 12 tick move, should be able to grab some of that. Let's go in the middle. How about we do that? I'm going to go with a 7. I know it doesn't seem like a big deal, and it's not. Sometimes that little bit of breathing room can help. I still think the market. Now, remember, if you get worried that, oh my goodness, it's going to fill. Oh my goodness, it's going to fill. Now, you shouldn't worry. It's not that bad yet, but you can always press the adjust button to recenter. Okay. That was the point of the adjust button. Originally, it was designed for earnings, but you can use it whenever you feel it's necessary. So that's durable goods. If we didn't have Canada, I would test a trap trade that we have on durable goods. but I have tested it. It just doesn't return much profit because the report doesn't move all that much. Sort of like existing homes. We had a very small trap trade on existing homes, but it just didn't move that much. With a trap trade, you got to have a little bit of movement so that you have a place to reverse from. Remember, a trap trade is a specialized reversal trade. All right, so just one target, one position, looking for 15 ticks, but if the market moves 10 ticks, we'll move our target, our stop up to break even plus 7. So it's sort of like trading 2 contracts, but only using one and keeping the risk cut in half. So let's see how it works. Hang on a second. Man. I was doing some testing this morning. I knew that everything looked kind of weird. That wasn't my right connections. So I'm going to check my brackets one more time and check the pricing because that wasn't the right data feed. So let's make sure. It's always good to be awake. You got to pay attention. So I'm just going to go back and put my time at 0. I have a strange connection in there that when I backed up my Ninja, now we're seeing the gold open. So that's a whole different animal. All right, the gold market's opening. That's where that volatility is coming. I'm going to stay with our bracket. I'm going to put our time back to 8:29. And now on the other chart, we're looking at Canada retail. It's hard to be too serious about Canada retail, but I will say this. Canada retail last month, it almost had a decent move, but it hasn't done this in quite a while. So watching Canada retail on the right chart in April. And one of the issues also becomes you have to, if you want to make money on Canada retail, it's $5 a tick. Maybe it'll move 12 ticks. You have to trade a lot of contracts or you're going to make $20, $30. It's almost not worth taking the risk. Last month, because the targets aren't big, hits the first target. It was only a 6-tick target. And then I probably would have had a 12 or 15-tick second target. And it did get there. So Canada retail actually had a tradable move last month. All right. And I can tell the way I set it up. You could see, though, that's the news. So how would I set up Canada retail? It's a breakout, 8:29.58. A bracket of 6. And my targets would be a target of 6, a target of 15. I would use that target one stop move. I'd break even -3. Nice open on gold. And then the stop, I'd make 12. That's what I'd be looking like for Canada retail sales. You want to label it. And then we'll check those brackets. Today's date, 5/24. If you have Disney Plus, there's a new Beach Boys documentary that I heard is really going to be great. It's supposed to be fantastic. Very, very sad. They say that Brian Wilson is in a conservatorship because he has severe dementia now, or he has dementia. Yet they said he was still going to do some touring, so maybe it's not as bad as everyone was thinking. So Canada retail, we were going to test our brackets. Set the time to 0. So there's our brackets. Let me check my time. Okay, my gold trade is on my correct account. I'm going to trade that one contract like we said. And then Canada, I'm just testing. I'm not trading it with live money. It doesn't have the track record to prove itself at this point. Remember, what did we trade yesterday that seems like it's proving itself? Flash manufacturing. That trade definitely is starting to prove itself. It's not a terrible thing to make a trade prove itself. That means you might take a couple of months off when the performance isn't good to see if the trade can get back into a profitable zone. And thanks again, everybody on YouTube. Hit that like button, will you, folks? There's a lot of you out there. Hit that like button and hit the notification bell so you know the next time that we are streaming. We're going to go to the website Time Is. And check our time sync. So that's where we are. Now you'll see the gold market should quiet down after the open. Now that was a nice open. Gold opens at 820. Why at 820? I don't know. I do not know if there's a gold pit anymore. Are there any pits anymore at all? I'm guessing that there's still an S&P pit. I don't think there's a gold pit. I just remember the old days where, think about all the people that lost their jobs, the pit, because of technology. That's technology taking jobs, right? People that used to go to work, go to the pit, hold up a card, $3.80. So we've got 5 minutes. Durable goods. I showed you April. Durable goods in March. It's right here. Durable goods in March. Chops around a little bit. It should fill. It fills and has a nice solid fill. And then it changes direction and it hit the first target for a tiny profit. And if I move my stop to safety, so it took me out. Okay. So that was we call that a target one winner, a target one winner. And then February, pops up, just misses the first target by a tick. That's why sometimes it's nice to have a tiny bit smaller bracket, because it would have hit that target. Brought the target down to get some ticks, and then it pushed up. So honestly, the last three have been small profits, okay, on durable goods. No, the last 2 out of 3. April was a whipsaw stop. So in some ways, April being a whipsaw stop is great. I love when a report that we trade just had a stop, because it's a decent report. So we might be starting on a new couple of winners in a row. So I'm not upset that it got stopped. This is Canada retail in July. I don't have any other videos other than the one I showed you from last month that actually looked not too bad, and July. Canada retail. The news is almost, it's a little worse than expected. And they also had housing news and manufacturing sales. So it was a little bit of confusion, a little bit of contamination on small reports that might affect each other, but not much of a reaction. And that's the big issue with Canada retail, the lack of action. Okay. The lack of action. Action Jackson. Remember that movie? Hosting these webinars, it's like all the junk that floats around in your head that you've been exposed to over the years, like Action Jackson. I mean, all these snippets of useless pop crud that just floats around in our brains. It's unbelievable if you think about it. I guess that's why we have filters and we just don't say everything that comes to our minds. All right, so we've got less than a minute. I'm not going to really even pay attention to Canada retail, because you might have to manage that one contract lower risk trade. So the idea, remember, is if we get a fill from durable goods, we've only got one target. Wow. That was sweet. That was sweet. So we got exactly what we asked for, 15 ticks. Even Canada retail seems to be coming back to life a little bit. Move your stop, maybe. We'll talk about gold in a second. On durable goods, what a trap trade. We were testing a trap on durable goods. Hey, Chantal, what was that spike? What's the size of that spike on gold? That was a very fast move. Let's get a roll call if you traded it with me. And no reason why you shouldn't have. I did not scare you out of that trade today. So I would like to think that some people traded. So Roz, are you using the VPS? And then Canada, you could see looks to me like there are fill in Canada was 79.25. I'm just looking to see the quality of the fill where it was. Canada just didn't really follow through the way we wanted it to. I mean, that's the reality. Durable goods with an explosion like that. Steve, nice trade. Chantal, Roz, I'm reading what you say because I'm trying to figure out, okay, why you had a timing issue. I guess, are you using the VPS? Have you ever used the VPS or you haven't? Now, I will say that was a super fast move, way out of the ordinary in terms of speed of the move. I did think that maybe we'd get some positive slippage on that. Sal made, that's a pretty good profit on micros. It almost makes me think you had positive slippage on micros. Sal, check your targets. I'd be curious about that. Buellnox does, correct me if I'm wrong, does it struggle with super fast breakouts? I've set up my Buellnox, but I haven't traded on it yet. The top step doesn't seem to do too badly. So that was a trade. We went for the highest profit, but we only traded it with one contract. So when you get a phenomenal move, you're making less money because you took less risk. That's the downside of trading a one contract trade. You went for lower risk, but if we would have traded both contracts normally, we might have made 220. We would have made that 6 or 7 tick first target plus the second target. So you have to understand that if you reduce risk, you're giving something up to do that, right? You're giving something up. Now, looking at the news, they were expecting, the major news was really a big offset. They were expecting negative durable goods, and it was very positive. And that probably caused that oversized reaction. Canada retail, I'd say the same thing is true. They were, and then we also had Canada manufacturing sales. There's no forecast on that one, but Canada retail sales worse than expected. So I'm thinking on Buellnox. Now, I wasn't watching reversals this morning. If I've got 2 events going on, for me, it's hard to watch reversals. It doesn't mean you all shouldn't watch reversals. And also when we're streaming, there's a lot going on. So I was not thinking reversals, but obviously gold had an amazing reversal. And then all the lunatics out there that insist upon trading the NQ no matter what, right? The NQ offers up pretty good reversals very often, okay? So I know people like to trade the NQ. Now, sometimes the trade candle might be too fast for the NQ, but look at that reversal. The market was super bullish before the news, and it wanted, really, you could see it desperately wanted to get to the high of the day, which it's going to now. So you could see the sense in why a reversal would make some sense. But I'm seeing, Brian, that you did not have a good fill on your Buellnox either. So you have to, when you see people trading, I'm trying to think if people trading micros, cash, people trading cash made money, And then if the prop account didn't make money, then you have to think about, well, what's up with the data feed, right? We know that prop accounts are not the same data feeds. Let's look at the video, because the video will tell us something about the speed of that market move. But the lesson, the real lesson is, here's a way to trade a report that you may not be dying to trade, but you can reduce your risk and literally cut it in half by trading one contract. And the software has that feature, if the market moves X ticks, which simulates trading two contracts. It's a fantastic feature. And in our case, it hit that target. We didn't have to worry about the stop moving or about doing any kind of management, because the move went all the way through. Now, my fill was 23.38.40. Not a horrible fill for a speed of that fast, but it was almost halfway down the candle. It's actually not a bad fill, in my opinion. Yes, Roz, I was assuming you were on a cash account. I was assuming cash for you. Let's look at the video, because I think what hurt anybody that had a loss was a very fast move. There's no denying that it was a fast move. Let me make sure I have the right video here. Yeah, okay. So here it is. Watching gold right here. There's the brackets. That was a really fast move. Really fast. I'm surprised that it worked for cash. That easily could have filled at the bottom of the candle and stopped us out on that reversal. So a little bit of liquidity, Okay, I want to thank everybody on YouTube. Hit that like button on your way out. We will be absolutely streaming again next week, at least 3 times. 1,000 Locks, we're trading futures with Ninja Trader, and there is a way to stop the blue line from popping up. We do have a feature that turns off that blue line. Yes. So we have to close our YouTube stream, but thanks everybody for watching. We'll see you again next week.